Our second technical tool is called the trend line. And the trend line is a very powerful technique which assists us in determining whether or not we should stay invested or whether or not we should be invested in a share. Let's look at how this works. Let's assume that a share price is in a bull phase. The highs are higher than the previous highs, the lows are higher than the previous lows, and the market is rising generally. It's uncanny how, if you draw a straight line connecting the bottoms of that rising curve, it's amazing often how many points that straight line does touch. Now, the trend line is only in place once it touches 3 or more points, because remember that a straight line can touch or join the bottoms of any 2 points. So the trend will be in place after the first, second, third point is touched. This almost gives us a trend upon which the rise continues. It gives us a sense of comfort knowing that had we invested in the share previously, we should stay invested so long as the share price is living above its trend line. Now, a trend line, the strength of the trend line can be viewed in terms of 3 components. First of all, the number of points that it touches is an important indication of the strength of the trend line. Secondly, the length of time that the trend has been in place. And a third aspect to consider is the gradients of the trend, the steepness of the slope. Often if a trend is too steep and is moving up at an angle of greater than 45 degrees, it cannot sustain that. This trend is far more friendly, and the graph has the capability of sustaining that trend over a period of months, if not years. What we look for in a trend line, in violation of the trend, is that if the graph now rises up and cuts down through that extended straight line, that would be a point of penetration or violation in which we would then conclude that the market has gone outside of its trend, and that very often is taken as an early warning signal, even a signal to sell the share. Please notice that when you're dealing with a rising trend, you always join the bottoms of that trend line. And that early warning signal that the trend has been violated is a signal to sell the share or to be cautious about the potential of selling the share in the near future. Let's now have a look at what the trend line would respond to if the market were falling or in a bear phase. If the market is falling, your trend line would be used to join the tops of each of those cycles. And once again, the number of points touched, the length of time that the trend has been in place, and also the gradient of that drop would be important indications to determine the strength of the trend line. Once again, we would look for a buy signal in that the price line cuts up through its trend line and at that point violates the trend. That would be an early warning signal that the share might be changing its trend direction, or in fact could be construed as a buy signal for you to get into the share. Let's now have a look at a practical example of a trend line.